Revenue Mobilization Allocation and Fiscal Commission unveils strategy for electronic data collection. European markets inch higher as stocks lead gains in Asia Pacific. And on Commodity Watch, gold steadies near 9-month peak on hopes of slower federal rate hike. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Musa Abubakar, your guide. Let's begin with revenue sharing formula. The next phase of review towards the nation's revenue sharing formula will be concluded within 3 months. Chairman Revenue Mobilization Allocation and Fiscal Commission Mohammed Bello Shehu made the disclosure at a Tulem program enlightenment workshop for subnational on electronic data collection in Abuja. Lekatun Babatunde reports that this is part of the horizontal revenue allocation formula.
The attempt to review the existing horizontal allocation formula in 2018 was told by some anomalies which the Revenue Mobilization Allocation and Fiscal Commission RAMFAC say did not represent its hallmark of fairness, equity and justice. While the vertical allocation formula has been reviewed and submitted to the President for onward transmission to the National Assembly, this week-long session primarily targets to digitally close all the loopholes to achieving a workable horizontal formula.
Call for the data to states will take at least a period of 3 months for those states to upload those data, and then we send people that will verify those data, looking at what is submitted. At least a period of about 3 months.
The RAMFAC electronic data collection system is to be unveiled during the workshop. It is designed to enable the Commission migrate effectively and efficiently from the manual collection of the relevant data to a digital platform that will place all stakeholders on the same page.
It's a proprietary software developed in-house with expertise from RAMFAC, taking into consideration the experiences that we have had over the years and the issues.
Participants here are expected to return fully equipped with adequate knowledge on data preparation and how they can key into the newly introduced electronic portal from their states and local government areas.
Now to energy. Oil prices deep in early Asian trade on Monday, but held close to the highest level since the start of the year on optimism that China's reopening will lift fuel demand at the world's top crude importer. Brent crude fell 36 cents to $84.92 a barrel, while U.S. West Texas Intermediate crude was at $79.65 a barrel, down 21 cents. Amid thin trade during a U.S. public holiday, both contracts rose more than 8% last week. Gold steadies near 8-month peak on hopes of slower federal rate hikes. Let's take a look at prices of other commodities. Now, developed economies have continued the push from fossil fuels, leading to reduced buys for African crude. Now, with indications that Dangote Refinery and about 10 others across Africa may, from this year, provide an immediate market for African crude, taking more than 1.7 million barrels per day of crude oil from the global market. Could this be the magic wand amid foreign exchange crisis, stability of the continent's economy, energy security, as well as value addition? I have joining me Bala Zaka, a petroleum economist from Lagos. It's good to have you join us, Mr. Bala Zaka.
Thank you.
Looking at 1.7 million barrels a day of crude to be expended when Dangote Refinery and 10 others across the continent start production soon. What does this portend for Nigeria and the continent as a whole?
Okay, thank you for that excellent question. When the Dangote Refinery practically comes on stream, there will be practical implications for Nigeria. There will be practical implications for the continent of Africa, and there will also be a practical implication for the crude oil cartel called OPEC. So let's start with Nigeria. If the Dangote Refinery comes on stream, there is every likelihood that a chunk of the crude oil that they will require for refining will come from Nigeria. And what that will do is that Nigeria will be selling most likely to the Dangote Refinery. But the advantage, the key economic advantage, first of all, for Dangote is that the distance from the point of sale and the point of getting this crude oil will be very, very close. And that will be good for the Dangote Refinery. Then for the Nigerian economy, instead of going very far to expend so much on foreign exchange, you pay for the vessel, you pay for insurance, you pay for security and other ancillaries. All those may not happen. There is every likelihood that from the oil wealth within Nigeria, the crude oil will be connected. And there is the same thing again from Dangote Refinery. We will have crude oil, refined petroleum products, either by rail or by pipeline to respective depots for distribution. Then for the continent of Africa, it is going to be clear now that that thing we have always spoken about through African Union of regional and continental understanding and agreement will come into being. At the end of the day, the continent of Africa will conserve so much foreign exchange and they will be able to boost their external reserve. Then for OPEC and the crude oil cartel, of course, there will be so much shortage on what will be sent to the crude oil cartel, because the crude oil cartel led by Saudi Arabia control the global cartel of OPEC in terms of volume production. So that volume production will, of course, go out of the global market, and there will be a need for OPEC to boost further production. And in that case, Nigeria may be asked to up her quota. And if we are able to reduce the business climate hostilities in Nigeria and the insecurity, we are likely to see oil companies, whether local or multinationals in Nigeria, coming up to boost production. So overall, the economic benefits will be huge.
Okay, the refinery is expected to come on stream. Their capabilities at Dangote Refinery, for instance, which is about 600. It's going to produce like about 650,000 barrels per day, while the NNPC combined refinery capacity is around 445,000 barrels per day. Middle expansion in Egypt. And other African countries like Algeria. In all, how positioned is Nigeria to take this market?
Well, Nigeria is fantastically positioned, and this is the way I will explain it. On the side of Dangote, Nigeria and Nigerians should not expect so much, because first of all, the Dangote refinery was constructed using funds. And the funds must have come from shareholder funds or getting the funds from creditors, they must pay the cost of debt that we technically call interest. So to that extent, we will expect the Dangote refinery to reasonably want to maximize profit. But because they will not be importing from a long distance, by the time they refine and they sell to the Nigerian market, it will still be relatively cheaper compared to where we go to import refined petroleum products. But in the case of the Nigerian state-owned refineries, this will be a time of boost. Because if we are able to fix the refineries, that means Nigerian state-owned refineries will be able to compete with the Dangote refineries. But we'll expect it to be cheaper in terms of the products to be sold to Nigerians because it's a state-owned refinery. But at the end of the day, the products from the Nigerian state-owned refineries will be sold to some West African countries. And before you know, we will be sending them to other African countries. By that, Nigeria will control the continental and regional market. I'm saying Nigeria because it will be the combination of the Dangote refinery that is a private initiative and the Nigeria state-owned refinery that is a national refinery. So it will be a win-win situation for Nigeria because Dangote will also be paying or complying with civil responsibilities of paying taxes, levies, and corporate social responsibility. Between you and I, it will be a huge turnaround for Nigeria among the Committee of Nations.
Okay, there's so much expectation from the Dangote refinery. Will it translate to disappear? We no longer having queues in filling station.
Yes and no. It is yes because we will save the cost of long distance importation. You know, it is because we are importing from a long distance. Through the sea, there is cost of barges, insurance, security. That's why the landing cost is very high. But in the case of Dangote is located at Lekki Free Zone. So the cost of distribution and selling to Nigerian market will be relatively cheaper for us, even if we were not to have our own state-owned refineries. But why I want us Nigerians to bear and appreciate and sympathize with Dangote, because that fund that Dangote has used to develop the refinery or to put the refinery must have come from either shareholders or from creditors. So Dangote will be expected to maximize profit. So from that angle, yes, Dangote will satisfy the Nigerian market, but please let us remember that Dangote is a private initiative. It must remain in business, pay either the shareholders or creditors to be able to remain in business.
Okay, the campaign against fossil fuels by developed economies has intensified. What is the threat level to patronage of our crude oil? Because there's so much emphasis now on towards clean energy.
Between you and I, while I support going green, I will quote me that I said it's largely going to be political. Because fossil fuel is still going to remain relevant for many years to come. Because I was discussing with some people and I said, okay, look at when you construct roads, you will require bitumen. Bitumen is the product of refining. Bitumen is from crude oil. Are we going to say we are not going to have coal tar again on our road? And how will you get that coal tar without refining? And let us understand that most of those who are championing this going green, petrol is not part of their problem. Cooking gas is not part of their problem. Diesel and aviation fuel are not part of their problems. So these are the things, and all these things we have mentioned are going to be derivatives of crude oil refining. And let us bear in mind that there are some global economies today, I don't want to mention them, that are still relying on coal to generate revenue and generate energy. And crude oil is even a less toxic, fossil fuel compared to coal. So if coal is still being used as an energy source, between you and I, in the next 2-3 centuries, crude oil is still going to be a major energy player. Going green is very important. But when you look at energy requirement, practical energy requirement to run the industries and transform Nigeria, West Africa and the continent of Africa into an industrialized nation, we will definitely require crude oil and crude oil derivatives. And some even states will may even require coal, which is even more toxic. But in the worst case, we can switch over to natural gas, which Nigeria still has in abundance.
Well, thank you very much, Balazaka. Thank you for sharing your thought with us.
Thank you.
It's a pleasure.
Thank you, sir.
Yeah. Now, moving on, Nigerian equities up by 2.5% as turnover hits 29 billion naira. This and more after this break. More people in towns, communities and villages are expected to travel from one place to another in less time and less cost. This is because the Ministry of Works and Housing is getting the largest share of resources allocated for infrastructural development in the 2023 budget. Abdullah Mohammed reports.
In the last couple of years, millions of communities across the country have reasons to roll out the drums and put up smiles like never before. This is because their communities and villages have been linked with new roads and bridges.
Distance between policy and results requires a bridge, and we are building those bridges to the results.
And the policymakers have decided to add the number of roads and speed of completion with a bold move in the 2023 budget. 6 critical sectors take about 5.7% of the whole budget. These squares up to about 1.24 trillion. The Ministry of Works and Housing had the largest chunk in the group, taking home about 435 billion. This means that many in more communities within this year will smile and more drums will be beaten to inaugurate more roads and bridges. In Abuja, Abdullah Mohammed.
Equities market up by 2.5% as turnover hits 29 billion naira. Mopel Dakok brings us more on the markets in the week ended.
Positive sentiment lifted the stock market's capitalization by 703 billion naira to close last week at 28.602 trillion naira. The NGX All-Share Index advanced by 2.52% week on week to close at 52,502.48 basis points. The stock market gain is on the backdrop of investors' bargain hunting activities in NTA Nigeria, which rose by 6.9%, Dangote Cement and Boa Cement. Also, a total turnover of 1.286 billion shares worth 29.634 billion naira in 19,816 deals were traded in the week by investors. All other indices finished higher with the exception of NGX Insurance and NGX Growth indices, which depreciated, while the NGX ASEM and NGX Sovereign Bond indices closed flat. The financial services industry led the activity chart with 952.2 million shares valued at 9.7 billion naira traded in 9,647 deals. This was followed by the industrial goods industry, while the conglomerates industry was in the third place. Trading in the top three equities, FBN Holdings, Sterling Bank and Guarantee Trust Holding Company accounted for 507.8 million shares worth 5.7 billion naira in 2,585 deals. A total of 7,591 units of exchange-traded products ETPs valued at 1.7 million naira were traded last week in 58 deals, as well as 51,785 units of federal government bonds valued at 51.6 million naira. 51 equities appreciated in price in the week. 27 equities depreciated in price, while 79 equities remained unchanged.
And now this week is kicking off on a negative note on the Nigerian equities market. The NGX all-share index depreciated to 52,348.82 basis points from 52,512.48 points on Friday. Market capitalization dropped to 28.512 trillion naira. Investors exchanged 221.854 million shares valued at 3.249 billion naira in 5,219 deals. Now, European markets inch higher as stocks lead gains in Asia Pacific. Neka Oko has more on the markets.
Hello and welcome to the Global Markets Review. Global stocks faltered this Monday after their best start to a year in a generation, as investors assessed whether the rally had gone too far given the outlook for inflation, growth and earnings. Now, markets in Asia mostly rose as expectations of cooled inflation in the US lifted investor sentiment in the region. In mainland China, the Shanghai Composite rose 1.01% to 3,227.59. Hong Kong's Hang Seng Index also added 0.04%, while in Japan the Nikkei 225 depreciated by 1.14%. European markets were muted on Monday as investors assessed the growth and inflation outlook in light of recent data. The DAX was up 0.14%, London's FTSE gained 0.09%, and the French CAC was flat. U.S. equity index futures slipped as investors assessed whether a rally in risk assets may be overdone due to the outlook for inflation and economic growth. The Dow Jones Industrial Average lost 0.27%, S&P 500 also dipped 0.44%, and Nasdaq Composite sank 0.72%. Now, African stocks continued their rally this Monday after an impressive outing on Friday. South Africa's JSE Africa 40 gained 0.22%. The tone index of Tunisia rose 0.07%, and Namibia's overall index added 0.28%. And that's Global Markets Review. I am Neka Oko.
Well, that's it. This is where we end this episode of the program. Don't forget you can access all previous episodes on YouTube. Do join us again tomorrow at 9:30 a.m. I'm Musa Abubakar.